Look now at what we can expect from the local market with Stan Shamu joining us from IG in Melbourne. Stan, thanks for your time. Let's talk about expectations for the market today. SPI up just a little there. Commodity prices are higher. What are you calling at the open?
Well, at the moment, we're actually calling the Aussie market up 0.2% to around 49.71. So that's a slight improvement from that slump we saw into the close yesterday. Of course, sentiment is somewhat improved at the moment after we saw a bit of stabilization in European debt markets, and of course some fairly positive comments from Mario Draghi as well. Now, locally, it's all about earnings today. Of course, you can't look past the fact that we've got the likes of CBA, CSL, Latents, all on the calendar. Of course, CBA will be the headline report today, expecting cash earnings to rise about 4.5% to that 3.73 billion mark. So that's around where consensus is at the moment. Of course, we're also expecting a pretty strong dividend of about $1.63 a share. So that will probably be one of the main tickets to look out for there in their earnings. Of course, we'll have to look at credit quality and, of course, expectations for credit growth. Of course, CBA is one of the biggest home loans out there, so it's a big asset for them. So as long as we can continue to see improved asset quality from that perspective, then it should be pretty positive. But we can't really look past the fact that its stock price has had a monster rally over the past few months, and of course this has expectations running really high that the company will continue to deliver on strong earnings and return significant capital to shareholders as well. So this has been underpinning them for a while, and this will probably be what a lot of investors out there will be looking out for. At the same time, of course, the outlook statement always grabs a lot of attention, particularly with the Australian economy in the situation it's in at the moment. I think everyone really wants to know how sustainable some of these banks' earnings and dividend payments are. At the same time, if they have any opinion on where interest rates are going, then this could have a pretty big influence on how the market trades today. If you look at a company like CSL as well, they've had a monster run. Of course, everyone's now starting to price in high quality earnings for the stock. It's been delivering on high quality earnings for a while now. So I think heading into today, it might be a situation where a lot of investors would be looking to sell if there's any slight disappointment or if they just meet guidance. We also have, of course, that $900 million buyback that they've been conducting for a while now. So we'll need to see if there's any further comments on that. That's really helped underpin their share price for a while, along with the gains they've had in market share. So they're in a pretty strong position as well. Looking at the resource space, we're expecting a slightly firmer start for BHP, up around 0.2% to 37.69. Now, of course, we saw a slight improvement in the commodities space, but with China out of action, it's hard to get a read on iron ore. So at the moment, we don't really have a good feel of what we can expect from the rest of the iron ore space. But no doubt it will be all about earnings. Moving on to stocks like Bradkin, which reported yesterday and lifted the whole of the industrial space. They've got an upgrade today by Credit Suisse to an outperform. So there'll be another stock to continue keeping an eye on as well.
Okay, just wanted to reiterate, CBA there, you said cash earnings up 4.5% to what, sorry, Stan?
3.73 billion.
Okay, great. All right, we'll keep an eye out for that one. Let's talk about currency action, because this is where the focus has been this week. Equity's not moving too much. We had Mario Draghi speaking overnight and the G7 warning about continued volatility in the currency space. Talk us through some of the movements after that speech.
You know, we had seen the euro relatively stagnant over the past couple of days, and that was mainly after suggestions that the Eurozone might look at intervention on the euro, because a lot of European officials felt that the euro's strength was quite negative for the economy. But Mario Draghi really came out and just squashed these rumors and speculation, I suppose. He basically said, look, we're happy to keep our mandate to managing policy, as opposed to trying to control the exchange rates. So it really doesn't seem like they'll be involved in manipulating the exchange rate at all at the moment, and that really did relieve some of the stress that we've been seeing on the euro. Managed to rally back above that 134 level into about 134.8. At the same time, Mario Draghi was quite optimistic on Spain. He really feels that the country is on the recovery path, and might obviously surprise a lot of people who were quite skeptical on the Spain front. At the same time, the OMT program is probably not going to be activated anytime soon. He suggested that unless there's a really dire situation in which they feel it's the last resort, then we probably won't see it being activated. Of course, everyone was waiting for that for a long time last year, but with Spanish yields cooling the way they are at the moment, trading around that 5.3% mark, then we really can't expect that to happen anytime soon. But everyone took this quite positively, and the euro is now looking like it's lined up for a rally back into that 135.6 level, which is the recent high, ahead of resistance of about 137.18, which was when it managed to finally break to those highs a few weeks ago. So yeah, no, absolutely, at the moment it seems like there'll be more buyers of the euro in the risk space.
Okay, interesting. Stan Shamu, thanks so much for your time. And just a quick note, I'm just seeing some words across the screen. The Dow in the United States closing at